So hello everybody, welcome to my webinar 315 on 315 at 315. And a lot of stuff going on in student loans and important things, important deadlines and whatnot we need to talk about. So I need to make sure I get it on video so people have an opportunity to prepare accordingly. And also at the end, of course, we'll answer questions that you may or may not have. So you get to ask me personally, you'll get to ask me any questions you want. So what I want to do is start out by just introducing myself. If you're not familiar with who I am, most of you will be, but my name is Jan Miller. I'm president of Miller Student Loan Consulting, and I have been helping borrowers with develop repayment plans and strategies for student loan repayment for over 28 years now, and I've worked for multiple loan servicers and multiple departments. I have a big financial background, and anyways, I put all that together and kind of created my own business long ago. And have been doing it ever since. So that is my story in a nutshell. And I always like to mention or explain real quick, just to know a little bit about me, is that you might be wondering how to pronounce my name if you haven't talked to me before. So my name is spelled Jan, and I typically go by Jan. I was named after, my father was a musician, and they named me after a opera tenor named Jan Pierce. My father liked him and his singing, so he named me after him. However, my mother is Swedish, and that side of the family, won't call me anything but Jan. So the answer to your question is, how do I address Jan or Jan? Either is fine. I go by either. So I will answer to either. And but Jan is technically correct because I was intentionally named by my father after somebody who pronounced their name Jan. So there's the long answer to that question. All right, so I'm going to jump right into all the stuff here. The big news, of course, that has to be mentioned right off the top and is the most important thing is that the SAVE lawsuit was settled Monday of this week. So as of March 15th, the SAVE program, the SAVE lawsuit is no more. It's been settled. And that means that shortly hereafter, in the coming months, at some point, the U.S. Department of Education is going to force all borrowers in the SAVE forbearance or in the SAVE plan into a different plan. You're going to have to choose a different plan. And typically those two plans, the main two plans are going to be, of course, income-based repayment and pay-as-you-earn right now. After July of next year, you'll probably have the opportunity for the RAP program. And then, of course, the pay-as-you-earn program is going away eventually. So income-based repayment and RAP in the future after July will be the only two programs available. So I always like to go over the terminology behind income-driven plans because it's very confusing. Just to explain, so there are 6 different income-driven repayment programs. The IDR is not a plan at all. It's the blanket term for all the IDR plans, which include SAVE, pay-as-you-earn, revised pay-as-you-earn, income-based, income contingent, and this new RAP plan. Those are all income-driven plans. So if you're approved for SAVE, for example, or for IBR, you'll get a notice saying your IDR plan was approved. And you'll be like, wait a minute, I thought I was in IBR. You are. IBR is one of the 6 IDR plans, as is pay-as-you-earn, SAVE, and the RAP plan, and the income contingent repayment plan. Now, of those 6 plans, 4 of them are going to be phased out. One of them, the SAVE program, is going to be phased out sooner rather than later in the coming months. The pay-as-you-earn, revised pay-as-you-earn, and the income contingent repayment plan will be eliminated or sunsetted out, as it states in the big beautiful bill, between July of 2026 and July of 2028. When that is, we don't know exactly how long it will take them to do that, but at some point they're going to phase the pay-as-you-earn out. If I were to guess, which I don't like doing, I don't like speculating, but it's probably fall or winter of this year. I doubt the pay-as-you-earn program makes it all the way to July of 28. But in most cases, you might as well stay in it for as long as you can, until it's time to switch or until they force you out, because, especially if it has a lower payment for you. That's going to leave us with two plans: income-based repayment and the RAP plan, which is the repayment assistance program created by the new administration. So that's, in a nutshell, the a basic tutorial on how the income-driven plans are named and titled. All right, so the main thing with SAVE is, when do you switch? Do you switch now? Do you do it right away? Do you try and stay in it for as long as possible? Now, I'm going to tell you, in most cases, you're going to want to switch now. So there's a number of reasons that you're going to want to switch. Number one, they're going to force you to anyways pretty soon. But number two, it gives you the opportunity right now to establish an anniversary date on your next plan, whichever plan you switch to, during tax time. And this is an important advantage because it allows you decide whether you choose the prior year tax return or the current year tax return that you apply for. So, for example, if you were going to switch to from the SAVE program to the income-based repayment plan, and you had filed taxes, married filing jointly last year, simply because you haven't had to file separately for many years due to the pandemic and now the court injunction, they keep extending the anniversary date. Well, now you're going to be forced to switch and provide new proof of income. So you may need to file your taxes separately first to exclude your spouse's income, as long as it doesn't cost you too much with the IRS to do that. And of course, that's determined on a case-by-case basis. But if you're in that situation, then what you'd want to do is file your taxes first right away, and then switch to, once you have a separate filing on file, then switch to the income-based repayment plan, or whichever plan you're going to. So that's an example where you want to file taxes first to establish a separate filing. That's one reason. The other thing, again, that you can do as well is it allows you to file married filing jointly every other year too. So you can file jointly or separately on the odd years, 2025, 2027, and so forth, and jointly on the even years for 26, 28, and so on, and still keep your payment only based off of your income if you time everything right, because you'll be able to file taxes before you file jointly and after you file separately every year, essentially making it based on a separate filing tax return or income each year. So it's just one of many examples or benefits from establishing an anniversary date during tax time. So if you switch from SAVE to a different plan, when you switch to a different plan, it establishes a new anniversary date 12 months from when you're approved for the plan, right? So if you, March 15th, you apply or to switch to IVR or pay as you earn, then once that's approved, let's say it takes them 2 weeks to do it, April 1st, now you have an April 1st anniversary date. That means every year your window will open up a few months prior to that to allow you to recertify that plan. And as a result, that overlaps with the times, with the tax season. So you can file first or after. You can file separate or joint, whichever benefits you the most. And you can decide whether you use, in this case, for example, right now, the 24 or the 25 return. You can time it just right, and that's a big advantage in your qualifying payment going forward. So that's another reason to switch plans. The other thing to remember too is that some people don't want to cancel SAVE because they've been strategically using the forbearance, right? They've been able to use that to leverage that against their other financial objectives, or they're not ready to make the payment right now, and so on. There are a number of reasons to do that, believe it or not. Well, you can still go into forbearance after you leave the SAVE forbearance. So the SAVE forbearance is a particular type of forbearance. However, it's likely that you still qualify for additional hardship forbearance, discretionary forbearance, and in some cases, student debt burden forbearance. So there are still forbearance options for many years afterwards if you need to use additional forbearance before you're ready to make payments. So that's another reason to not fear the switch. Now, there are some reasons to stay on the SAVE forbearance, and again, that's if you haven't filed taxes yet, you need to change your tax filing, or you're making less money now, or you did file jointly and you need to file separately. Again, there's much of individual reasons for that. But you still want to act quickly within this time frame so you can still establish the anniversary date during tax season. And the other thing that's important, the other reason to switch sooner than later, is that there are 7 million borrowers in the save forbearance still. And the moment they're required to switch, you're going to have 7 million people, 7 million applications to switch plans within a 3 month, 90-day time frame, most likely, which is going to make obviously the loan servicers very busy. So if you want to get in now, it'll be processed probably a lot quicker and even Mohila and some of the other bad loan servicers are processing income-driven requests pretty quickly right now. So getting in early will ensure that you establish that recertification deadline during tax season, and you'll beat the rush that way. So that's something to consider. The other thing too to mention real quick with all the plans, regardless of whether you're in SAVE, IVR, income contingent, or any of the other plans, pay as you earn, the one of the new things that people are going to notice, one of the new processes that you'll see that you haven't seen before in all of student loans, and that is this automatic recertification. So now if you've linked to the IRS, in the coming years, they will recertify you immediately based on your prior tax return. And you may not want that. The first thing I want to let you know is if that happens to you, and it gives you a higher payment, then we can always go in and change it. Use alternate proof of income documentation, or again, if you need to file taxes, if they did that before you had a chance to file taxes, that can be corrected. So it's a nice convenience for borrowers who have a steady income growth where their older tax return is always going to be a little bit lower than their current one. But sometimes you have larger tax returns due to the proceeds from a sale of a house or securities or an inheritance, or you win the lottery or whatever happens that might increase your tax return 1 year. And as a result, if they do this automatically for you, it might boost your payment higher than you need to. So if that happens automatically and you didn't want that to happen, then you can always do an additional what's called a recalculation, and we can recalculate that payment based on more recent proof of income documentation or alternate proof of income documentation, like a W-2 or a paycheck stub, something like that. The other thing you can do is if you really want to prevent that, you do not want to provide a tax return ever, then you can log into studentaid.gov, go to settings. So at the top right-hand corner, you'll see a tiny little link with your first name in it once you're logged in. You click that, you click settings, and then you'll click the financial information. What is it? Financial information request, something like that. You'll click on that. It's like the fifth one down. And then you'll revoke consent. And if you do that, then that will prevent them from doing that as well. So that's a proactive step that you can take to do that. So that's a little bit on that you want to be aware of. Now let's talk to parents, because this is the other important thing. Parent plus borrowers who have parent loans. Number one, do not consolidate your loans after July 1st of this year. In fact, the consolidation process needs to start well before that. So it has to be finished by June 30th. Any loan or any consolidation dispersed after July 1st, it'll forfeit your eligibility for the income-based repayment plans, all of them, even the new RAP plan, essentially wiping out public service loan forgiveness eligibility. Like theoretically, you could have 119 qualified payments and then consolidate your loan. You'd still have 119, keep the amount of qualified payments, but then you would no longer be able to get into a qualified plan to finish out that payment. You'd be stuck at 119 until probably the next administration comes or the next Democrat is in office and changes that. Who knows how long that'll take. So do not consolidate. And again, with the consolidation, there are some of my clients that I will be consolidating or help them consolidate in the coming months so we can get that in before July 1st. But we're not going to flirt with that. So all parent loans especially should be completely consolidated by June 30, which means we'd really want to submit them. I mean, they say 90 days to submit a consolidation, but if it's done electronically, most consolidations, in my experience, only take about 30 days, even less. So it's typically we could probably get it done if we submitted before May 1st, but we don't want to flirt with that date. So the sooner the better. So to parent borrowers who all the loans aren't consolidated, in other words, they still have loans with balances that say Parent Plus, you probably want to schedule a call with me because we want to get that taken care of and make sure that all those loans are consolidated. Anything dispersed prior to July of this year. Now, the other important thing for parent borrowers, the same parent cannot take out any more loans after July 1st unless they're okay with losing PSLF and IBR eligibility completely. In other words, if the parent borrower who already has student loans right now takes out another loan for the same child or a different child, that will forfeit their eligibility for PSLF, for all income-driven plans, for the RAP program, for everything. You won't qualify for anything. So make sure that you don't take out any additional loans for any of your other children after this date if you already have debt and you're relying on those income-driven plans to keep a lower payment, or even the senior strategy. We don't want you to take out any more of those loans. So don't take out any more loans that are Parent Plus loan. Now, if you need to, if you still have kids in school, have the other parent take it out, and that's okay. So, and the sooner the better, so that you can maintain the old limits, right? If you get a loan dispersed before July 1st of this year, then you'll still get the unlimited Parent Plus loan limits for the child going forward, even if you switch parents. But that the other parent has to take out those loans, and those have to be dispersed before July 1st, so it's pretty hard to do. They'd have to take out probably spring credits, something like that. Otherwise, you can still take out parent loans. The other parent can. They just will be subject to those new, $20,000 or $30,000 limits that Parent Plus loans have. All right, so Parent Plus loan borrowers, again, the main thing is don't consolidate after July 1st, and don't take out any more loans ever for the existing borrower who owes them. The other spouse can do it if they want to, if they don't mind not qualifying for income-driven plans. Real quick note on borrower defense, because there's this whole post-class thing and this lawsuit, and people feel like they're supposed to, since they haven't made a decision, they're supposed to win by default and get their loans forgiven and so forth. So think of this honestly like a lottery. There's nothing you can do. You bought your ticket, you submitted your borrower defense application. And I don't know what's going to happen with the lawsuit. I don't know if they'll ever give you credit for it. I'm hoping that the post-class people will. They should be legally entitled. Or for new applicants, again, borrower defense is a mess of a department, and it has been from the history of its existence, not even just during this administration or the last, but for as long as borrower defense has been alive. You submit your application, and then cross your fingers and hope you get it, but I would go on as if you're not going to, and if you do get it, that's great. So don't rely on borrower defense, even if you think that legally you're entitled to it. You're going to kind of be subject to whatever the law determines and whatever they're forced to do to compensate you for that, or even follow through with whatever the legal guidelines are. So just wait and see on borrower defense. Nothing to do. There's no magic trick I can do or anything like that to help that along. You just got to wait. I wanted to talk about a couple system problems that we're seeing with both income-driven repayment requests and with public service loan forgiveness. IDRs, first of all, are actually processing pretty quick right now. You can tell that they beefed up their department in anticipation of all the SAVE people who are going to have to switch. So I've noticed that even Mohila has been processing at least electronic requests pretty quickly. If you have to upload documentation or whatever, it can take a little bit longer, right? So when you're doing the application online, if it tells you what the payment amount is, then then it linked properly to the IRS, and those are done electronically and should process within a week or two probably. However, if it doesn't link to the IRS, or you're using alternate proof of income and you upload your tax return or your W-2 or whatever, then it has to go to a clerk or a rep to actually process that request. There's a longer queue for that or backlog, and it can take a month or two. But those seem to be processing pretty quick. Wouldn't you say, Veronica, too, though, even those? But still a little bit longer for those. I've seen situations where it's not recognizing the new tax filing. So, for example, I had a client this week filed jointly last year in 2024. And I advised her, okay, wait till you file separately, and then after you've filed your taxes, then you can go in and switch from SAVE to IBR, or recertify your plan or what have you. And she did that, and it still gave her a payment that was $1,000 a month too high, and it was obvious it was still seeing the 2024 return, even though she had filed her 25. So might want to give it a little bit more time after you file, before you switch or recertify or recalculate, just to give it an opportunity to update with the IRS link. And also, and you can always schedule a call with me if you don't know what to expect with your payment. I'll be glad to calculate it and tell you, okay, this payment, it shouldn't be any higher than this or that. So in this case, her payment should have been 400 and it was 1800. So it was an obvious difference, right? And I'm sure there's going to be a lot of people panicked when they see that. But the way to fix that, if that's the case, then we can upload the new document and simply do a manual recertification, or we can wait a week to see if they update the system one way or the other. But you might see that. If you do, I want you to be prepared for it. And then it go like normal, and this has been since the history of time, but sometimes requests are declined for no reason. So if that is, again, it's very fixable. Just let me know. And also, again, I mentioned this too in my last webinar, and that is that if you've submitted a request to switch plans or to recertify like over 4 to 6 months ago, they're just probably not going to get processed. Assume that you have to submit again. So that's just the reality of it. Not much we can do but recertify. But if you do recertify again, they'll probably be processed pretty quickly now. They just mostly disregard all those old applications. So for PSLF issues, the first thing I want to say, the good news about PSLF is that the PSLF department itself is working really fast and really well. Employment certifications are processing within days to a week. The forgivenesses are quick. We had a client who put in a final employment certification on January 9th of this year and was forgiven, or January 16th of this year and was forgiven on February 9th. So less than a month after they submitted the final employment certification, their loans were forgiven. We've had a number of people forgiven just this year even. Program is still working. The only program or the part of PSLF that is not working is, of course, the buyback program. So with buyback, and again, I had a video that came out that said don't bank on buyback, and that's essentially still my message on that. The buyback program still exists. It evidently is not going to be canceled. It wasn't canceled under the big beautiful bill. However, FSA or federal student aids staffing is so low, and there's so little effort devoted towards the buyback department that they're processing like one application for every 5 they received. They're well over a year behind. They're so far behind now. I don't even know how far that is. Years, 1 to 2 years, or what have you. So for borrowers, this is kind of what I tell people with buyback. With borrowers who are looking for buyback and they're on pace to request the buyback in the next couple of years. In other words, in this administration, during this administration, now until 2028. You're probably going to just get to 120 payments by making monthly payments before you ever get forgiven under the buyback. So I recommend in most cases to just continue making your monthly payments even after you submit your buyback. If you get the buyback, great, but assume it's not going to be there and just keep making your monthly payments until you get to 120. It's just more of a sure thing. I always say fight, scratch, and claw for every qualified payment until you get to 120. Once you're at 120, then you're great. You can take the hands off the steering wheel, stop making payments. No more recertification for employment, no more IDR applications or recertifications. Literally no additional forgiveness requests. Once you say 120 out of 120, and that's on your tracker on studentaid.gov, then you are there. You're good to go. Hands off the steering wheel, you're going to get forgiven eventually. You're in the queue to be forgiven automatically when that happens. But getting there is the tough part, right? So, and especially if you're in the save forbearance and you didn't get credit for that, and you need a little buyback, or getting in the correct program, making the qualified payment you can afford, and so on, and meeting all the criteria for the program in real time, that's that's the more challenging part. So when it comes to that, make sure that that you have all your ducks in a row and that you babysit it. Obviously, I'm helping with that for some of you. But it never hurts to look at your payment history, make sure you're getting credit and so forth in PSLF, because sometimes you have to force them to do their job and to update the totals correctly. But with buyback, again, I wanted to give an example of buyback that where you might want to. I'm going to give 2 examples real quick where you might want to rely on buyback, right? Number one, I have a client, for example, who works in a prison system, and is in a very difficult job. And she hit her buyback totals. And I said, well, listen, I advise her, you might want to just keep making monthly payments just to make sure you get it. She's like, no, I'm done. I'm getting a new job. I can't stay, whether I get the PSLF or not. I just can't do this anymore. Okay, well, then you're buyback, absolutely. Hopefully, you'll get it eventually in that case. I do think that most borrowers who apply for it will get it, but it's just a risk that you don't need to take if you're going to just make monthly payments and it's going to take 2 years to get the buyback, anyways, in most cases. But in her case, I have another client who actually has 119 payments, and Danielle, and she's no longer working nonprofit, and that's not going to be an option. So she is relying on the buyback. Another example would be if you're a physician and now you're an attending, but you were a resident during the save forbearance time period, meaning that your income is much lower, and therefore the buyback will be based on a much lower payment, so on the hundreds instead of the thousands. So buyback in those cases might save them 20, 30, 40, $50,000 in total cost. So in some of those cases, it might be theoretically better to then put your loans in forbearance after you do the buyback request and wait for the buyback amount and pay the lump sum to save money in that case. Even then, some of my clients are like, the heck with it, I'm just going to continue paying. Again, get to that 120. Yes, you'll have to pay a little bit more in cumulative payments on the back end because you're making more money now. But psychologically, I just can't deal with this program anymore. Just get me forgiven, whatever it takes. So that's a personal decision. But those are examples where you might still shoot for buyback. But if you've got like just 10 months or 20 months to buy back and your income isn't that much higher, so your payment's going to be a little bit higher in the future, but not much, then in most cases, I would say just keep making your monthly payments. Whatever you pay in buyback or what you make, whatever monthly payments you make after you apply for buyback will reduce the buyback amount by that total approximately. So essentially your out-of-pocket cost is going to be similar. It's just the buyback would speed up the time frame when you got forgiven when you paid the lump sum. Otherwise, you can keep making your monthly payments after that without the buyback until you get to 120 anyways. But anyways, that's my little thing on buyback because I get a lot of buyback questions. The other thing about buyback is that on some accounts, it's not letting me submit or letting you submit the request. So you go on, and I'll walk people through online, who shared their screens, and we'll click on it, and it'll let them go all the way up to the final thing, and it'll say there's an error message, or this website is down for maintenance, or something like that. It's giving this error when you try and submit the buyback. That's not happening on all accounts. I've seen it just one yesterday or the day before was a borrower was able to submit, but I've seen a lot, even as of today, I've seen that error message on some accounts. So um, if that's the case, you're going to have to wait until they update their system. We will try and notify them so that they realize it's a problem, and then you can submit your buyback. But again, since buyback is such a year, it's going to take years before you get it. A few weeks to wait for them to update the system in the big scheme of things is probably not going to make that much of a difference. So anyways, that's some of the buyback stuff I want to talk about. A couple things just about PSLF missing history. You can be missing out on qualified payments for PSLF for a number of different reasons. One of them is that the months are just gone. Like if you ever go and you log into studentaid.gov and then you click on view details in the PSLF section, and then you click the top button that says payment history, and you'll see, ineligible or employment not certified or qualifying. So ineligible means that it's an eligible month. It's very common in people in the save forbearance to have ineligible months, and that you can request buyback for those months if you get it. If it says employment not certified, that's a good thing. That means that if it's green and it's got that green circle and it says employment not certified, that means that month counts. You just haven't certified your employer yet. You don't have a recent enough employment certification that overlaps that time frame. As soon as you do another employment certification, that will change from employment not certified to qualifying. And of course, qualifying means it already qualifies. It's a part of the number total that you see out of 120. So those are your qualifying payments. Now, sometimes you'll see where the month is missing, like you'll see July qualifying, August qualifying, and then December and January. Well, where did September and October go? Right? And November. And this honestly typically happens, especially for borrowers at Mohila, because what Mohila does, their system is pretty archaic, especially if you have a zero balance IBR. Let's say you have pay as you earn or IBR and it's a $0 payment. Um, then often Mohila's system won't even generate a statement, and they don't even notify federal student aid and the loan discharge department that you had a qualifying month. So you have to, if you do nothing, you won't get credit for that time period. They won't, it'll be invisible. You'll just go to your payment history tab and you'll see gaps in months. So it's always a good idea, because I can't check this for everybody all the time. It's a lot to do. But to log into your studentaid.gov, if you're in PSLF, click on view details and click on payment history and make sure there are no missing months. Now, if that is the case, there's a couple ways you can do it. The best way, honestly, you got to have a little fight in you because you have to call Mohila, but they have a, a resolution department that you can submit a request for them to update and to properly um, uh, submit that information and correct it for you because that's their job. So it is Mohila's job or the loan servicer's job, whether it be Aid Manage, Nelnet, Mohila, or Ed Financial, to notify the loan discharge department that that month is eligible, that you made the payment on time. If they don't do it, then the loan discharge department won't know about it. So the loan discharge department, if you call them, they'll say, "Well, we have nothing to do with it. We just didn't get anything from Mohila." So you'll have to call Mohila. Now, if the other recommendation I've heard other student loan advisors tell people to do is to submit a complaint on studentaid.gov or with the Consumer Protection Financial Protection Bureau. You can do that and, you know, uh, pray, and maybe that'll get done. Or you can contact Mohila and, get, fight for that ability because they do have the ability to correct it at Mohila. And I'm calling out Mohila because I don't see this as much or as often with any other loan servicer. It's very common for Mohila, especially people in a $0 payment. So if you have an income driven repayment plan at zero payments, $0 for a payment based on low income, and you're in the PSLF program, make sure you go to your history tab and look through and make sure everything's listed there. It probably will be, but in some cases it's not. I always see the problems, right? So I don't, in reality, it's probably not that often, but it does happen. Okay. Um, the only other thing too to remember is that when you're looking at, if you next to the payment history tab and you hit the tab that says employment certification, you'll see the employment certifications that have already been approved. Ignore the submission date. You'll notice that on the same employer, when you update it, they're not updating that. So you'll see a date range, a recertification date period from October 2021 to October 2025, but then the submission date will say September 2022. So ignore the submission date, the date range or the recertification period. That is the important part of that equation. So those are the time periods that have been certified. Okay. So, all right, deep breath. I think those are the majority of things I want to talk about. I'm going to open it up to questions now. Remember that if you are a member, I'm not going to be looking up your account and looking at the specific details of it. So try and keep the questions a little bit general. I can always ask you, for some specific information if I need to get the answer, but I may be limited as to how precisely specific I can be to your situation. But that says, does anybody have any questions? All right.
Hello.
Alan, yes, how you doing?
I'm very well. Good to see you in person.
All right, yes. How are you doing? I
I'm
can't see
okay.
you because I'm just looking right at the camera right now. But yeah, go ahead with your question.
Uh, I don't know what's in that closet. Uh,
Yeah, you don't want to know.
so my child's final year is this year, and so you gave us a whole lot of information, and I don't know exactly what applies to Plus, what doesn't apply to Plus after the whole explanation. So, uh, you talked about using 1 year of income or another, like 24 or 25. Is that relevant to Plus loan?
Well, for Parent Plus loans, the most important thing is that all of your loans are consolidated, right?
Mm-hmm.
So all of my comments for Parent Plus loans and the urgent information surrounds two different things. Number one, make sure everybody is um, fully consolidated. So in other words, if you have any loans, like if you look at go to studentaid.gov and look at your loan history, your loan list here, if you click on my loans and then loans, and if you have any
Hmm.
loans that have a balance remaining that say Parent Plus, then those loans will be consolidated and you need to let me know. And I'm reviewing all the accounts that I can, but I want to make sure that this is so important because it could forfeit your eligibility for forgiveness for those loans that are not yet consolidated. So, and if they are consolidated, then we can lump them in with the forgiveness totals of either the PSLF or the IVR or IDR plans. So that's the first thing. We need to make sure that the loans are consolidated before July 1st of this year, which means that we need to apply at the latest by the end of April, but the sooner the better. That's the first thing. The second thing is that if any parent takes out additional loans, so you say you still have one student in school, right?
But he's graduating in May.
Graduate. Oh, wait. So there'll be no more loans that are taken out after May of this year. All the loans that need to be taken out have been taken out, right?
Yes.
Yeah. So as long as there's no additional disbursements after July or after June 30th, really July 1st and on, then you're fine.
Hmm.
But
Great.
I'll give an example for borrowers who that's not the case. Let's say your son had another year. Then I would, make urgently tell you to not take out additional parent loans for this fall because that would forfeit your eligibility for all income driven and forgiveness programs and lower payment programs forever. Amen. On your parent loans for your entire balance, even in the loans already existing. It's a very brutal new rule in the Big Beautiful Bill for parent borrowers. So, but in your case, since you've already taken out all of the loans, you don't have to worry about it. Now, when it comes to tax season, that's a different thing. Now the parent loan, the same rules apply, and essentially this will be an every year thing. If you're already in, Ellen, remind me, are you making payments now, or you have a $0 payment? You're in a $0 payment, right?
I'm at $0 payment.
Yeah, you don't have to worry about it then.
Hmm.
In your particular case, it's only for borrowers who need to recertify the income-driven repayment plans
Hmm.
within this time frame. Those are the people that I'm talking about, and especially borrowers who need to switch plans that they're in that are eventually going to be canceled, namely the SAVE program. That's the big one right now that they're going to force people out of. Those people have been waiting and sitting there for a couple of years now, and
Hmm.
they've been asking me for years, should I switch out of it? And in some cases, I say yes, some say no. And the ones that haven't switched out of it, now I'm telling you, okay, now's the time. Let's do it on our own terms, and let's do it and time it so that it makes sense with your tax filing. But in your particular case, it doesn't apply to you.
Well, thank you for that. My income has been uneven of late,
Yeah,
especially with moving to another country. So I have a lot of tax questions. So I will make an appointment and
yeah,
meet with you. Thank you.
absolutely. No problem. Thanks for your question. Do we have anybody else that has a question? No questions. All right, that's great. So, um, I know that was a lot of information, and as Alan said, it's your mind can go numb hearing all this stuff. But there are basically the main things I want to get across, and I'll be a broken record, and that is for parent borrowers: do not consolidate after July 1st. In fact, don't even consolidate after May 1st, and don't take out any new loans under the same parent for existing borrowers who are pursuing forgiveness programs. So anybody who's seeking help from me almost certainly is going to be doing either the senior strategy or the income-driven repayment plans as long-term solutions for the repayment if they have parent loans. So that would be the main thing there. But those are the most important points. So if we don't have any questions, which I think this is a first where I have literally every
Jan,
other, yeah, go ahead.
yeah, do you mind? I'm sorry. Yeah, I just a quick question about the obviously the buyback thing. I know you're probably blue in the teeth answering questions about this.
That's
Is
good.
there a set number? Is there a set number of months that remember originally everybody was like, "Yay, we can do all this buyback," and
Yeah.
was there a set number of those months? Or because what happened was, I'm with you, and we went from IBR to Save, and now I'm in PAYE. And I suppose it depended on how long you were in the Save program, how many months you could have tried to buy back. And unfortunately, I was coming up on with the buyback. I think I was coming up on August being finished, but looks like I'll have to keep going on. But and the only reason I'm saying that is because for some of us, so for example, physicians, sometimes you can try and negotiate contracts and to get, student loan stipends and assistance in your contract, and they kind of need to know how long you have loans for. But I know it's obviously you don't have a crystal ball, but was there a set number of months that were buyback?
Well, so most people have around 20 now. There's no limit. You can have as long as you've been in the save forbearance, you'll be able to buy back every month you're doing that. And the save injunction happened in June of 2024, approximately in the summer there. And depending on how long it took the servicers to get people in the save forbearance, sometimes they were in repayment all the way till August of 24. Sometimes some people were ineligible immediately in June. That's about 20, 21 months ago. And so right now, typically when I look at somebody's history, they're looking at about 20 or 21 months. The first 12 months of that is based on your income at the time or whatever your payment was at the time that the save forbearance happened. After 12 months, then the lump sum is based on your more recent proof of income documentation. So if you haven't provided recent proof of income documentation, then they'll request it for that tax year before they approve the buyback amount. But because the first 12 were based off of your income at the time, if your income is a lot lower, then it might be worth waiting for it, right? Because your lump sum might be considerably less, maybe even by tens of thousands of dollars, especially if you were in training then and now you're an attending. But yes, but there's no limit to the amount that you can get. Did that answer your question?
Yeah, I guess I have to resubmit my employee certification form and see where I am, and then maybe I'll give you a call in August. We can go through the account and just see which where we need to go, because I don't remember when you had switched over from Save to PAYE last year, and I can't remember when. So
Yeah. So we'll want to know when the anniversary date is too,
yeah,
right? But yeah, and you can schedule a call to do that. But yeah, um, yeah, that's something to be aware of. We'll look at that together.
yeah. Thank you.
You're welcome.
Hey, John.
Anybody else?
Hi,
Yeah,
John. Can you hear me? Yeah.
I can.
So yeah, I joined 15 minutes late, so I'll check out the recording. But did you go over the taxes and married filing jointly, separately stuff?
A little bit, yeah. So
Yeah.
essentially, and I am recording this, and eventually I will be
Yeah.
sending this out to everybody, so you'll be able to watch it there.
Okay.
Again, if I don't cover your situation, but the tax situation right now is really complicated because borrowers have been filing differently in the last 5 years than they would normally for their student loans because they haven't had to recertify, right, in most cases in a long time. And plus, so much has changed since you've had to, since prior to the pandemic in most cases. So, so yeah, it can get kind of complicated. So, but yeah, I talk a little bit about it in the beginning,
Okay.
but you might want to have a call too, so we can personalize it,
All right.
and I can
Yeah, we have a
tell you
call next
specifically how
week,
to handle
John. So
yours.
yeah, we'll go over that.
Oh,
So, yeah.
we'll
Okay.
talk. We'll talk then.
All right. Thank you.
You're welcome.
Bye.
Anybody else? Going once, going twice. All right. Well, thank you everybody for showing up. We try to make this pretty quick, um, and mailed it in 45 minutes, which is a record. I think every other webinar I've done, the we've had to stop people from asking questions. Like we haven't been able to answer them all. We've gone like for 2 hours. So this is great. This gives me a little bit more time. But thanks everybody for attending the webinar. I hope that was helpful. And again, as a lot of you are members, I'm sure that you'll probably be scheduling calls if you want to just talk to me personally, which is totally another reason I did this webinar, to prompt you to do that if necessary. So other than that, everybody enjoy their weekend, and always reach out when you need me.